Welcome back, accounting students. We are currently working on Chapter 13. Chapter 13 is accounting for payroll and payroll taxes. And remember that Chapter 13 is a continuation of Chapter 12, where we were preparing payroll records. Now in Chapter 13, we're accounting for not only the payroll, but also the payroll taxes. In the first lesson, we were recording the payroll. In the second lesson here, we're going to be focusing on recording the employer payroll taxes. So the objective of this lesson is to calculate and then record employer payroll taxes. One thing that you want to pay attention to is the idea that there are really 4 payroll taxes that employers are responsible for paying. First would be Social Security, then you have Medicare, and then there's a federal unemployment tax and a state unemployment tax. And so those are 4 separate payroll taxes that employers pay. And remember, this would be different than what employees pay. This is what employers pay. So there's the Social Security and Medicare, and then federal unemployment and state unemployment. Now, the federal unemployment is determined by the federal government, and Congress takes care of setting that information. So when you look at that federal tax rate for the unemployment, right now that's referred to as FUTA, FUTA, and then the state is referred to as SUTA. What you want to be aware of is that the state tax is determined individually by states, and it's typically some factor of the federal rate. And so the FUTA tax rate is different than what you're seeing on the tax rate, the state tax rate. Now, in terms of employer Social Security and Medicare taxes, those are determined by Congress as well. So for this textbook, we're going to be using 6.2% of earnings up to the tax base, which is, we're going to use 106.8. But just to remember that that's a little bit different than what it is out in the real world, and that's indexed, so Congress changes that, if not on a yearly basis, like every other year or so. The Medicare tax rate then is, that they're using in the book, is 1.45%. So you would just want to keep in mind that those are different. Now, the FUTA that we're looking at here in the book is 6.2% of the first $7,000 earned by each employee. So when we're calculating the unemployment taxes here, you can see the first employee, John Butler, previously he earned more than $7,000. So he has nothing going for that FUTA tax, okay? No FUTA earnings. If you look at Anthony Feng, previously he has earned less than $7,000. So his current earnings would be eligible to have FUTA tax taken out of them. So you always want to look at what the employee's previous earnings were before you would determine if they had current FUTA earnings that you needed to tax on. And so you can see this chart does a really nice job for us looking at, hey, earnings that potentially are subject to the FUTA, what did the employee actually earn for the period, and then what would be taxable under the FUTA tax. And employers do keep records like this just to make sure that they have good, accurate information. Okay, so what you can see here in terms of journalizing the employer payroll taxes, here, let's go full screen. On December 15th, we're seeing a notation that we reported an employer payroll tax expense of $757.01 for the semi-monthly pay period. There are 4 different taxes owed: Social Security, Medicare, federal unemployment, and state unemployment. So then we would look at the different T accounts, and the total taxes would be the $757.01, and then it's going to be broken up into those individual taxes that are payable: Social Security, Medicare, federal unemployment, state unemployment. we're going to go ahead and record a general journal entry. Payroll tax expense is the debit, and then we're going to credit all of the accounts that are now the payable accounts. So Security tax payable, Medicare tax payable, unemployment tax payable for federal and for state. Now, as to remember, the payroll tax expense is recorded when the payroll actually happens, but these are taxes that are payable because we might not be sending this payment in right away. But in our records, we need to note that these taxes are payable at a future time. So you can see on December 15th, that's when we're recording it, the account that's debited. You can see the accounts that are going to be credited and the amounts. So we are already up to audit understanding. Isn't that nice? So the tax rate for 3 Green that they must pay on employees in each of the following taxes. So we want to be thinking about Social Security, Medicare, federal unemployment, and state unemployment. And the book is using 6.2% up to 106.8 on the Social Security. Medicare is 1.45. The federal unemployment is 8% on the first 7,000, and then the state is 5.4 on the first 7,000 earned by each employee. What is the amount of each employee's earnings that would be subject to federal and state unemployment taxes? So it's capped at the first $7,000. So after an employee earns $7,000, that we're not collecting either the state or the federal unemployment tax. All right, that's it. So from here, you should go ahead and do the form online, the work together, and on your own, and then you can move on to 13-3. Good luck.